Everyone's looking at growing their wealth these days with stocks, mutual funds, fixed deposits, startups, and so much more. But there's one investment class that flies below the radar with competitive risk and good returns, and that is corporate bonds. A corporate bond is usually a loan that you give to a company, and the company gives you fixed returns on a semi-annual, which is a 6-month basis, which could differ to be either annual or maybe quarterly or even a monthly basis. And at the maturity of the bond, you get your entire invested amount back. Now, why do corporates issue bonds? They do it to fund their operations, for expansion, for new projects, for research and development, without giving too much equity or any equity for that matter, and without expensive bank loans. Now, corporate bonds are a great addition to your portfolio. They give you higher returns than fixed deposits and government bonds while giving you regular income and capital preservation as well. Safety of the corporate bond depends on the credit rating of the bond, and that's where credit rating agencies that you may have heard of, like an ICRA or a CARE or an INRA in India, come into play, where higher rated bonds offer low risk while lower rated bonds offer higher risk. And where there is lower risk, usually the returns are lower, and when there's higher risk, the returns are higher. There are different types of corporate bonds as well. You have secured corporate bonds, which are backed by assets, by debentures. You have unsecured corporate bonds, which are not backed by anything specific, which may give you higher returns. And you have perpetual bonds as well. Earlier bond investing was reserved for the big institutions, but with BondVue, now it is accessible to you. So if you're looking at better returns than your fixed deposits and less volatility than stocks, corporate bonds is the sweet spot, and you can start your journey with a few simple clicks at BondVue.